Everyone is an investing expert these days. Forget about qualifications, relevant experience, even pesky regulation. All it takes now is an audience and a platform. And then off you go. Recommend your favourite stocks and potentially cause significant financial harm to those who follow your lead. Shelby Church is one example of how not to do it. With 1.6 million subscribers, Church has published a new video called Invest With Me, my 10 stocks for 2021. Would you take investment advice from a 25-year-old tech and lifestyle YouTuber from Los Angeles? You probably shouldn't. In this video, this 41-year-old chartered financial planner is taking a look at some of the best bits of Shelby's Invest With Me video. Lots of lessons in this one, things to look out for when you come across any influencer on YouTube, TikTok, or elsewhere. So let's watch a bit of this video together.
I've shared quite a bit about my finances on YouTube, but one thing I've never really shared with you guys is investing in stocks. To be honest, I used to feel really intimidated by investing in the stock market, and in the past, I've just had a financial advisor do all of that for me. This last year, though, I finally dipped my toe into the world of individual stocks, and they actually did pretty well. So I'm gonna
Right, so that's how we got in started on this one. Of course they did pretty well. We're in a bull market. Anyone who started investing during this past year, and when I say investing, of course, what I really mean in this context is picking stocks or speculating, gambling. They absolutely need to keep in mind that they got lucky with the timing. Making money in a strongly rising bull market, especially when a lot of that market growth comes from a fairly concentrated number of tech stocks, requires very little in the way of skill. So even if you feel your portfolio did pretty well in the past year, please take care to separate luck from skill.
Pretty well. So I'm going to show you guys how my stock picks did this last year, and then I'll show you what I'm investing in now, and I'll actually invest $1,000. Before we get started, just a disclaimer that this is a very, very small portion of my investment portfolio. I actually still do have a financial advisor managing most of the money I have in the stock market. I also have a good chunk of money invested in real estate, so really my investment portfolio is a lot more diversified than what you see here. This is me being more risky and just for fun and picking stocks I want to pick because I just have like a gut feeling that they'll do well. I don't necessarily recommend that you do that.
Having a gut feeling for how to invest is not a reasonable basis for making investment decisions. Shelby also gives a disclaimer here. I don't necessarily recommend that you do that. And I think that disclaimer could have been stronger. It should have been stronger, Shelby. Don't do that. What's right for a millionaire YouTuber, Shelby Church, where she has property assets, she has a financial advisor responsible for the majority of her portfolio, that's not going to be suitable for most of her viewers. But the trouble is, they won't be investing just for fun in many cases. This will be everything they have, and that of course magnifies the risks involved.
Don't invest anything you're not okay with losing. I'm not a financial advisor. I'm just a random person on YouTube, but I will say my portfolio did pretty well this year.
Please think about the credentials of the people that you're watching or listening to before following their approach. Shelby, as she rightly just said, is just a random person on YouTube. She's got no investing experience, she's got no investing qualifications. And as she goes on to demonstrate in this video, she doesn't really understand the world of investing. Not a clue. So why is she putting content like this out there on YouTube in the first place? The next part of her video makes that abundantly clear.
So in this video, you'll see the app I'm using is Robinhood, and that is what I've used mostly for the past year, but now I'm starting to transfer everything over to Webull because of the way Robinhood handled the whole GameStop situation. Yeah, I don't really trust Robinhood after that. I actually had this video done about a week ago, and then all that GameStop, Robinhood stuff happened, and I was like, oh, I can't put this up like that.
This is all about affiliate income. If you take a look at the description of her video, the first link we get is for 4 free stocks on Webull. And this is how these retail trading platforms are growing so quickly. YouTubers and other social media influencers are creating content about their investment success, and then they share these affiliate links. So each time someone signs up to Webull, Robinhood, Trading212, any other platform, the influencer, in this case Shelby Church, gets paid. They aren't necessarily making money from success with investments, but instead they're getting paid each time somebody signs up to one of the investment platforms via their affiliate links. So that's where it comes from.
Point. Most of my money isn't even in Robinhood anyway. I was just using it for fun investments. I'm starting to transfer everything over to Webull. I don't even know if that's the best move. I mean, I'm gonna be honest here. I don't know what is the best one. It might be something like TD Ameritrade, something that's just been around a little bit longer. But I will say Webull did handle it a little bit better, and you get 4 free stocks when you deposit $100. So that's awesome if you're getting started with investing. I'll have it linked down below.
I'll have it linked down below. Clearly, Shelby was filming this video before the GameStop saga came out, before hordes of retail investors turned against Robinhood, and that's because Robinhood stopped them from buying more of the stocks like GameStop, like AMC, that they were trying to send to the moon. So Church had to quickly switch her preferred trading platform, but it's okay, because Webull was able to put her in a position where they would pay her too, with an affiliate link offering 4 free stocks.
So here is my Robinhood account. We can see in the last year, I got an 80% return on my investments, which is just so insane.
It is insane. There's nothing normal about an 80% annual return on investments, which is why I refer to this as speculating or gambling rather than investing. It's more akin to gambling than anything else. Anything that rises so quickly, so fast, it carries such a high degree of risk. You've heard that expression before, that what goes up can also go down. And we've seen this happen, haven't we, in the past few days with stocks like GameStop, the Redditors were trying to send to the moon. Those are crashing back down again too, because they're speculating, they're gambling, they're not investing. There's a big difference.
If we're being real here, a lot of that is because I took advantage when things were really low during the pandemic. You probably could have purchased almost any stock back in March and it would have gone up. So I'm not like a stock genius or anything, but I did take advantage of that timing.
You didn't take advantage of the timing, you got lucky. The ability to separate luck from judgment or skill is what will hopefully make you a successful investor in the long run. Getting lucky once doesn't give you any investment chops at all. None at all.
First up, we have a tie between Apple and the S&P 500. I bought them at different times, but now they've given me about the same return. So these ended up making me a nearly 25% return. So both of these, I didn't even buy at the lowest point of the pandemic. Then it probably would have been quite a bit higher. I bought them over the summer, somewhere in July, but still a 25% return is really good.
Apple is a stock, it's an individual company share. The S&P 500 is an index, a basket of 500 plus US company shares. Actually, Apple makes up a fairly sizable portion of the S&P 500, about 7.5% of its total market capitalization of that index. So Shelby, I'm sorry to say it, but you are double counting here.
At number 10, we have Google, which I ended up making a 30% return on. Now, my thought process with this one was I use YouTube every day. YouTube pays me. I essentially like work for YouTube in a way. Obviously, I believe in YouTube and Google pretty much taking over the world. I don't see Google going away anytime soon. To me, it seems like a pretty obvious one to invest in.
Okay, a couple of thoughts on this one. Investing in companies because you use them isn't actually the worst idea in the world. As a user of a business, you should have a reasonable idea of how it's doing, the products and services that it's launching, what the customer service is like. It's not the only factor you need to think about though, because you probably also want to look at some fundamentals, things like its profitability and cash flow and its valuation. But it's okay, it's not awful. But there is a big issue here around a lack of diversification. If Shelby Church relies on YouTube for a chunk of her income, then she's potentially overexposing by investing in Google or Alphabet stock too. And that's one to look out for. Don't double up too much.
Next up, we have Hyatt, which has made me a return of 33%. At the low of the pandemic, I went in on the travel stocks. I chose Hyatt because honestly, I really like Hyatt hotels and I like to invest in companies that I believe in and I use. So that's why I picked Hyatt rather than say Hilton or something like that. I bought one share back in March and then I put another $100 in July, and now we have seen a 31% return. Pretty good.
I'm not going to go through all 10 of her stock picks. I'll just pick out a few as a way just to illustrate a few of the investing lessons from this video. So we'll move on to the next one as well.
Then we have another travel stock, this time an airline. I picked up some Delta, actually 4 different times, and I've seen an average return of 49%. I bought it in the low of the pandemic, and I picked Delta simply because that is the airline that I fly the most. I love Delta. I think there was some worry that a lot of airlines were gonna go under, but the government sort of made it clear they weren't gonna let that happen. So it really seemed not terribly risky to put some money into Delta, and it's done very well.
Is relying on a government bailout materialising really a good idea, a good investment strategy? I'm not convinced. Never fall into the trap of believing that any business is too big to fail. A stock that relies on the government for its future survival prospects has the potential to go to zero if that bailout money doesn't show up. So Shelby saying it really seemed not terribly risky is, I think, way off on this one. It was terribly risky and she got lucky, so far at least anyway.
At number 3, we have an app I use pretty much every day, Spotify. I ended up making an 81% return on. Insane. So I bought Spotify right after Joe Rogan announced his podcast was going to be going there. It had already run up a lot, so I didn't think it was going to go up that much more. I really just bought it because I realized I spend money on Spotify every month, and so do millions of other people. And wow, did it do well. It's seen a 72% return, although I will say this one has gone up and down quite a bit.
Let me just read you this one from Wikipedia. The efficient market hypothesis is a hypothesis in financial economics that states that asset prices reflect all available information. A direct implication is that it's impossible to beat the market consistently on a risk-adjusted basis, since market prices should only react to new information. Shelby bought Spotify, after the Joe Rogan deal was announced. That information was already out there in the world and it was already priced into the stock. And she also refers to the volatility in that particular stock price, the up and down movement. So this is a risky stock.
I already know this one was going to be on here. Tesla was my second highest return at 112%. This one stings a little bit because I actually initially purchased Tesla back in June of 2019 at $200 a share, which would now be like 7 times as much, maybe more than that, including the stock split. I mean, I bought it at $200 a share and then sold it at $700.
This one illustrates why buying and selling stocks, trying to be a trader, is not the sensible way of doing it. The sensible thing to do is buy and hold them for the long term, a decade plus. That's the smart approach. When you dip in and out of an investment on a whim, that's when you miss out on the bulk of the investment growth. It's why market timing is such a fallacy. Nobody knows when the right time is to buy or sell a particular investment. It's all about the length of time that you hold it for, despite and through the short-term volatility. That's what makes all of the difference. Buying and selling like this is just not a smart approach.
And my biggest return was not a stock at all. It was Bitcoin. Honestly, I bought Bitcoin as a joke. I was like voted most likely to own Bitcoin by some friends, and I was like, hey, I should buy some Bitcoin. And that's what got me to buy $100 worth of Bitcoin back in like May. And that $100 is now worth like $450 or something like that. So yeah, huge returns on that. That's ridiculous. We'll see how long it stays at that number. Obviously, Bitcoin goes up and down. I don't know. So those were...
Obviously, Bitcoin goes up and down. I think understatement of the video there. Bitcoin is not an investment. It's not got any tangible value. It's not asset backed. It doesn't generate an income. It's unregulated. It's a haven for criminal activity and terrorist financing. And it's killing the planet due to massive volumes of electricity required to so-called mine it. It's subject to massive price swings, massive volatility. Once again, this is not investing money. This is gambling. This is speculation. Shelby then goes through her stock picks for 2021. Apple, she talks about an S&P 500 index tracker, Coca-Cola, Facebook. Actually, this one's quite fun. Let's take a look at that one. Shelby on her rationale behind buying Facebook stock.
Next up, I have decided to buy a little bit of Facebook, which is kind of weird because I kind of hate Facebook, but I use Instagram every single day. I'm sure you do too, and guess who owns Instagram?
Well, you do now, Shelby. You own a bit of Instagram now because you've bought some Facebook stock. No fundamentals, no assessment of value or future growth prospects, just I use Instagram every single day, so let's buy some stock.
Next one I'm going to buy is Piedmont Lithium. I think that's how you say it. I think electric cars are the future and are just getting started, really. And the batteries of these cars need a lot of lithium. This company in particular actually entered into a 5-year deal with Tesla. It has gone up a bit already, but I think it will continue. It doesn't have the hype that Tesla stock has. You know, I don't think a lot of people even think to invest in this one, but I think it's a good one. So $100 to that.
Again, efficient market hypothesis at play here. The valuation of stocks like these have already been massively inflated following that announcement, following that news of a tie-up with Tesla. Is there further to go? Or possibly, but hindsight probably shouldn't be your only driver behind stock selection.
And the last stock I'm going to buy, I don't know if it's the best time to buy it, but I'm just going to put a little bit in so I don't forget about it altogether. Airbnb. Airbnb recently IPO'd and they have shot up, but I want to invest in Airbnb because I mean, I'm creating an Airbnb in Palm Springs, so obviously it's kind of the same as me investing in Google. I believe in Google, I believe in Airbnb. I use Airbnb as a customer and I'm a soon-to-be host. I feel like I should own this stock, but I'm only gonna do like $20 into it because I feel like it's gonna go lower. I really do think it's gonna go lower, and I'm gonna buy more when that happens.
Okay, firstly, if you don't want to forget about a stock, write a note and stick it on your fridge. You don't need to buy the stock and add it to your portfolio so you remember to invest more in it in the future. And if you feel like it's going to go lower, as Shelby really does think it's going to go lower, don't buy it. You can even short it if you're that convinced it's going to fall in price. But again, that's speculation. That's not investing money.
Okay, I hope you guys enjoyed this video. Give it a thumbs up if you liked it and you want more videos about investing in the future. And yeah, I'll see you in my next video. Bye.
Shelby, a genuine request from me then. Please don't make more videos about investing in the future. I'll caveat that request unless you collaborate with someone who actually knows what they're doing. These YouTubers and social media influencers with such massive audiences, they're in a privileged position. They could genuinely educate young investors to make smart choices with their money, to create a financial plan first and then invest to achieve their long-term financial goals. They shouldn't be encouraging new investors to gamble with their money via stock trading apps that gamify the entire process. It's not just Shelby Church doing this, and it's possibly a little unfair for me to criticize her and use her video as an example, but it came up on my feed and I felt it was a good example of it. YouTubers and influencers everywhere are jumping on the investing bandwagon. And that's because there's big money to be made from sharing affiliate links to trading platforms and also from AdSense on their video views, because investing content is paid at such a higher rate than anything else other than perhaps tech reviews. That's why they're jumping on this bandwagon. I would love to hear your views on this. Should Shelby Church be sharing stock tips, or is this actually as dangerous as I think it is? Where are the financial services regulators in all of this? Just let me know in the comments what you think. Thank you for watching this video. Until next time, I'm Martin Bamford, and remember, when it comes to your money, the more you know, the faster it can grow.